Good afternoon. We're going to go over our Forex trades for today, Wednesday, November 4th. Two trades pulled out 6.3 pips on a size-adjusted basis. Both were last night. As this morning, we really couldn't do much because Janet Yellen started giving her testimony. Was supposed to start at 10, didn't start till about 15 minutes, 20 minutes after 10 o'clock. But she was giving testimony on the Hill. And just some things that she didn't talk about the economy for a while, but then she dug in. And some of the things that she said about the economy, she said, at this point, I see the U.S. economy is performing well. Downside risks from global turmoil have diminished. Labor underutilization has diminished significantly. No decision made on the December move. Data to be monitored. Gradual rates increases won't hurt housing market. So those are just some points of what she made comments when answering questions. I just, we don't agree with her. I mean, just the fact of saying gradual rate increases won't hurt housing. Well, it certainly isn't going to help housing, right? Downside risks from global turmoil have diminished. How can that be? China's economy is still cratering. Europe is entering deflation, or just about. Some countries already have in Europe. Japan is in deflation. How could they diminishing? Maybe they're saying they don't expect it to get any worse than it already has. That could be. Maybe that's what she's trying to guess at. And she says U.S. economy is performing well, was her actual quote, which is hard to justify when you have over 94 million people not in the labor force. Granted, some of those are under 18 and over the age of whatever retirement, but a big chunk of them are not. Matter of fact, we came across a article by, I don't remember the analyst's name, but he said if the government was reporting unemployment numbers like they used to just 10 years ago, unemployment would be 22.6%, I think the number was, which is staggering because we've been saying all along it's close to 20%, 18 to 20, maybe 21%. This is one of the highest figures I've actually seen from an analyst. And when listening to her today, you have to think that, and you have to wonder, does she and the rest of the Federal Reserve governors, do they really know what they're doing? We've been saying it all along. We've said it before in these videos that this is a financial experiment. It was a theory, a Ben Bernanke theory, and a couple of other central bankers' theory. He is a scholar on the Great Depression, and I'm not debating if he's a scholar or not. I'm not even questioning it. I'm sure he is, but it's never been done before. So when something's never been done before, you come up with a hypothesis, a theory, and then you put it to work. And it's either going to work the way you think or it's not. Maybe it works somewhat close to what you think, or maybe it's a complete failure. And it's odd, QE, what we've been doing here, and not just here, but around the world, not only has it not worked, it hasn't come close to what they thought it was going to do. So, let's take it off the table. And going back to yesterday's comments by Bill Gross, what we've been calling for higher rates, but the way he wants the Fed going about higher rates, and I was thinking about this last night, and I said it yesterday, it's ingenious, and it's even more ingenious if you really take a step back and think about what he wants the Fed to do. The Fed wants to raise rates. They want to raise rates in the worst way. They don't want to lose credibility. They want to raise rates by the end of this year. Matter of fact, the Fed fund future rates, odds of a rate hike in December went from 34% just a few days ago to now 54 or 56% during her testimony. It may even rise higher today because she's definitely leaning towards raising rates. They don't want to lose credibility. They want to raise rates this year, and there's only December left. So And amazingly, they're going to be doing it. The meeting is towards the end of December. Got a lot of people off their desks, off the trading desk, and they're going to be raising rates. It's just not a good thing, I got to tell you. If her and the rest of the Federal Reserve governors would take a step back and really think about what Bill Gross wants them to do, and now they consider him the bond king, right? I mean, the guy's ingenious. He's so intelligent. What he really wants them to do is a switch, and we've talked about it real quick yesterday. A switch from long-term paper to short-term paper, okay? So they have over $2 trillion in long-term paper. When I say long-term, 10 years and more maturity. And he wants them to switch that. And now the yield curve is extremely flat. So he wants them to sell those and purchase short-term. Short-term meaning 1 to 5 year paper. By doing that, you will get the yield curve to no longer be flat because they'll be putting so much pressure on the long-dated maturities, long-dated paper, selling it, making the yield rise on the long paper, and buying. They'll be putting all this buying pressure on the shorter paper, 2 to 5 year paper, driving down the yield. So you'll no longer have a flat yield curve. So it's essentially raising rates without actually raising the Fed funds rates. So if you raise rates that way, the Fed could kind of test the waters and see what happens to the economy with higher rates without actually raising rates, because they don't want their big thing is not to lose credibility. If they start raising rates and all of a sudden the economy goes really bad, stock market starts to come in hard, which is going to really hurt the rest of the economy. If housing takes a big decline, everyone's going to point the finger at the Fed and say, you people don't know what you're doing. But if they do what he's saying, the switch, they're not officially raising rates. So it'll be a lot harder for people, especially the people that aren't in the business all the time, meaning the senators and congressmen. It'll be a lot harder for them to point the finger at the Fed, right? So why not do it? It's so ingenious, but yet it seems like they're so blind to it. She made no hints today of doing anything like that. Now, it's only November 4th, so things could change between now and the meeting in December. But I don't think they'll even heed what Bill Gross wrote about yesterday. Unfortunately for you and for myself. Anyway, let's get to the two trades. That's enough of my rambling. First trade was 40% of normal size, US dollar, Japanese yen. We were long this 121.146. We pieced our way out of this. This was the average price of the piecing out. Our last piece, we got stopped out at break even down here. Picked up 10.2 pips or size adjusted 4.0 pips. Unfortunately for us, because we really saw it running to the half figure, and if it could get through that higher, and it did exactly that. It just took longer than we anticipated, stopping us out on the last piece at break even. Unfortunately for us, if it would have just held and continued that move higher, it would have been a really, really solid trade. But we'll take it. And the last one was Euro Aussie, which we were in for a swing, but it just wasn't panning out very quickly. We put an offer out there. We only had 10% of our normal size. We put an offer out there just ahead of the half figure last night before we shut things down, and just happened to get hit, picking up 23.7 pips or 2.3. And you can see where it is right now. It's been if we would have been holding it the whole time, we would have been flat to down a little to basically up pretty much where we covered. Last night it came down here. This morning around 10:30, same thing. So we had plenty of time to get out with the profit, but it just wasn't coming in hard enough last night. It could still work out though. I still think this thing is going to sell off. The only thing that's helping the euro against the Aussie compared to the euro dollar, euro and other pairs is that the Aussie is becoming so weak as well. So the euro is actually showing some strength against the euro. So I wasn't very, very keen on this short. I still think it could come in. It might take a little bit longer. I mean, euro, US dollar, I think the whole street is short it seems. we all know that, not that we all know, but I mean, you got Goldman Sachs came out with a piece this morning that we came across with their targets. They got the euro going down to parity. They were calling it to go under parity this year, euro to dollar. I don't know if it will. I think they adjusted their forecast now till sometime next year for it to do that. But everyone you speak to is claims to be short the euro to dollar. So we'll see. But the one thing when everyone's short, you have to be careful, because when the shorts decide to cover, these things can pop real quick. So you got to have your outs in place, whether it's a stop or even your profit targets, and just take your profit and run. All right, so that's it. We're going to wrap it up. 6.3 pips on those two trades on a size adjusted basis. Not great, not horrible. Couldn't trade this morning because of Janet Yellen, really. So there was some economic numbers. They were all right around estimates. It was not much to even speak about. So that's it. We're going to wrap it up. Have a great rest of your day. If you're still trading now, good luck. And we'll be back tomorrow, assuming you get some action tonight or tomorrow morning. Have a great rest of your day.